Good morning, Iggy. For today's interview series, I'd really like to dive into Stoneweg European REIT's recent transformation into a stapled trust with you. It's a topic I know many Singapore investors are curious about, especially since it just completed this major change on June 4th.
Hey Ivana, good morning. Absolutely. I'm excited to discuss this with you. As you know, I'm Iggy, and I've been covering topics like stocks, finance, CPF, and everything related to growing your wealth here at the Investing Iguana. Our channel is ranked 8th in the 2024 Influential Tigers by Tiger Brokers, with over 950,000 reads and 57,000 likes. I produced over 800 videos with more than 380,000 watch hours as of May 2025. This Stoneweg transformation is exactly the kind of strategic move that can really impact investor portfolios, so it's perfect timing to break it down.
So, Iggy, let's start with the basics. What exactly happened with Stoneweg European REIT, and why should Singapore investors care?
Great question, Ivana. Stoneweg European REIT just completed a major structural transformation. They converted from a traditional REIT into what's called a stapled trust, now called Stoneweg Europe Stapled Trust, or CERT. Think of it like this. Imagine you had a house that you could only rent out. Now suddenly, you can also run a property management business from that same house. That's essentially what happened here. The stapled structure combines their existing REIT with a new business trust, creating one tradable security that gives them much more flexibility in how they operate and generate income.
That's an interesting analogy. But why did they make this change? Was the traditional REIT structure not working for them?
The traditional REIT structure was working, but it had limitations that were becoming more problematic in today's market. You see, REITs have strict rules. They can't get more than 10% of their revenue from active business operations, and they can only invest 10% of their assets in property development. It's like being a chef who can only serve cold dishes. You're missing out on a lot of opportunities. With rising interest rates and changing market conditions across Europe, Stoneweg needed more tools in their toolkit. The stapled structure lets them keep the REIT benefits while adding a business trust that can do property management, development work, and other active operations without those restrictions.
So it sounds like they're trying to diversify their income streams. Can you explain how this stapled structure actually works in practice?
Exactly right, Ivana. Here's how it works. Every existing Stoneweg REIT unit got stapled to one unit in the new business trust. So if you owned 1,000 REIT units before, you now own 1,000 stapled securities, but each one contains both a REIT unit and a business trust unit. You can't separate them or trade them individually. It's like buying a combo meal. You get both the burger and fries together. You can't just buy one part. They trade as a single security on SGX under the new ticker CERT. The beauty is that existing investors didn't lose anything. No dilution, no change in their ownership percentage.
That makes sense. But I'm curious about the financial implications. How does this affect things like leverage and distributions?
This is where it gets really interesting from a financial perspective. Traditional REITs in Singapore are capped at 50% leverage, but business trusts don't have that same restriction. However, CERT has committed to keeping the total leverage between 35 to 40% with an internal ceiling of 45%. So they're actually being quite conservative. For distributions, they're maintaining their commitment to stable and growing payouts, primarily from rental income. The fee structure stays the same too, and they're actually waiving the business trust trustee fees while the securities remain stapled. It's like getting extra services without paying extra fees.
Now, you mentioned tax benefits earlier. Can you break down why this structure is more tax efficient?
Absolutely, and this is one of the biggest drivers behind the move. The key issue is Germany's real estate transfer tax, or RET. Under German law, if 90% or more of a property's beneficial interest changes hands, it can trigger transfer taxes. For a traditional REIT, if there's significant trading that affects 90% of the units, boom, you could face these taxes. But with the stapled structure, they can have joint ownership between the REIT and business trust components, potentially avoiding these tax triggers entirely. It's like having two different keys to the same door. You have more options for how to enter without setting off the alarm. This kind of granular tax planning detail is something we often break down in our daily premium content, where we get a head start on these insights.
That's fascinating. But let's talk about the investment opportunities this creates. What new revenue streams can they tap into now?
This opens up several exciting avenues, Ivana. First, they can now generate income from active property management and leasing services. That's revenue they couldn't capture before due to the 10% limit. Second, they have about 200 million euros in development projects across Netherlands, Italy, and France that the business trust can now pursue without REIT restrictions. Third, they can invest in supporting assets like solar power installations on their properties. Think of it like a landlord who can now also offer cleaning services, maintenance, and even install solar panels for extra income. The business trust component makes them more resilient to market cycles because they're not just dependent on rental income anymore.
It sounds like there are clear benefits, but surely there must be some risks or downsides for investors to consider?
You're absolutely right to ask about the risks, Ivana. The main concern is complexity. Stapled securities are inherently more complicated than traditional REITs. You're dealing with two different legal entities with different regulatory requirements. It's like managing two different bank accounts instead of one. More moving parts mean more things that could potentially go wrong. Investors also lose the ability to choose. You can't just invest in the REIT part if that's all you want. The governance structure is more complex too, though Stoneweg has kept the same management team to minimize disruption. And while the tax benefits are significant, they also create more complex tax reporting for investors.
Given these pros and cons, how do you think this positions Stoneweg compared to other REITs in the market?
This move actually puts Stoneweg in line with global best practices. In markets like Australia and the US, stapled trusts are quite common for real estate investment vehicles. Here in Singapore, we already have successful examples like CDL Hospitality Trust, CapitaLand, Ascot Trust, and Far East Hospitality Trust. So there's proven precedent. What makes Stoneweg interesting is that they're applying this structure specifically to European real estate, which gives them unique advantages in navigating European tax and regulatory environments. I shared a similar analysis with our members a few days ago, giving them a real-time perspective on this development as it was unfolding.
Let's talk about the practical impact on existing investors. If someone owns Stoneweg REIT units before this change, what should they expect going forward?
For existing investors, the transition should be relatively seamless. Their ownership percentage remains exactly the same. If they owned 2% of the REIT before, they own 2% of the stapled trust now. The trading mechanics are similar, just under a new ticker symbol. Distribution policy remains focused on stable and growing payouts. The main difference is that they now own a more diversified income-generating asset. It's like upgrading from a basic smartphone to a smartphone with more apps. Same core function, but more capabilities. The key is that investors need to understand they now own a more complex but potentially more resilient investment.
What about liquidity and market reception? How has the market responded to this change?
The market response has been cautiously positive. Stapled trusts in Singapore have generally traded well, and the structure is familiar to institutional investors. The fact that Stoneweg maintained the same management team and conservative financial policies has helped with investor confidence. Liquidity should remain similar since it's still a single tradable security on SGX. The international appeal is actually enhanced because this structure aligns with what global institutional investors are used to seeing in major markets. It's like speaking the same language as international investors, which could potentially broaden the investor base over time.
Now, looking at the European real estate market specifically, how does this transformation help Stoneweg navigate current market challenges?
This is perfectly timed for the current European market environment, Ivana. European real estate has been facing headwinds from rising interest rates, economic uncertainty, and varying regulatory changes across different countries. The stapled structure gives Stoneweg multiple tools to adapt. When rental markets are tough, they can lean more on active management income. When development opportunities arise, they can pursue them through the business trust. When tax regulations change in one country, they have more flexibility in how they structure their operations. It's like having a Swiss Army knife instead of just a regular knife. You're prepared for whatever situation comes up.
That's a great analogy. Now, for investors who are considering adding CERT to their portfolio, what should they be looking at?
Investors should focus on several key factors. First, understand your risk tolerance for complexity. This isn't a simple REIT anymore. Second, look at the quality of the underlying European real estate portfolio, which remains strong with focus on logistics, light industrial, office properties, and data centers. Third, Evaluate the management team's track record. They've maintained the same experienced team throughout this transition. Fourth, consider the diversification benefits. You're getting exposure to both passive rental income and active business operations. Finally, assess how this fits into your overall portfolio allocation to European real estate and REITs generally.
Before we wrap up, I'd love to get your personal take on this transformation. What's your overall assessment of Stoneweg's strategic move?
Honestly, Ivana, I think this is a smart strategic evolution. Stoneweg recognized that the real estate landscape is changing and adapted accordingly. The stapled structure addresses real operational constraints while maintaining the core benefits that attracted investors in the first place. Yes, it's more complex, but complexity isn't necessarily bad if it's managed well and creates value. The conservative approach to leverage, maintaining the same management team, and focusing on tax efficiency shows they're thinking long-term. For investors who understand what they're buying and are comfortable with the added complexity, this could offer better risk-adjusted returns over time. I'd rate this transformation as a positive strategic move that positions them well for the evolving European market.
And what about your recommendation for different types of investors?
For conservative income-focused investors who want simplicity, traditional REITs might still be more appropriate. But for investors who want European real estate exposure with enhanced operational flexibility and tax efficiency, CERT becomes quite attractive. It's particularly suitable for investors who understand stapled structures and appreciate the diversification benefits. The key is matching the investment to your knowledge level and risk tolerance. Don't invest in something just because it sounds sophisticated. Make sure you understand what you're buying and why it fits your portfolio strategy.
Iggy, that was incredibly insightful. Thank you so much for breaking down Stoneweg's transformation into a stapled trust for us today. I certainly learned a lot about how this structure works and what it means for investors.
My pleasure, Ivana. It's always great to discuss these crucial developments that can really impact investor portfolios. For those who want to really stay ahead and get my daily insights on moves like this, sometimes even before they're generally available, that's what our premium members enjoy for just about the cost of a coffee each month. It's truly a valuable resource for staying informed about these strategic changes as they happen.
Absolutely. Thank you, Iggy, for providing your insightful analysis on this complex but important topic. I look forward to our next video podcast together.